Right now, on the same day, in the same news cycle, you can find two headlines that cannot both be true. One says gold is about to get revalued by the US government on July 4th, and that number could send it to $10,000 an ounce. The other says gold just got crushed, retail buyers are underwater, and the reset story is a fairy tale being sold to scare you into buying coins at the worst possible time. Both of these are being said right now by people who sound confident, who have charts, who have credentials. They cannot both be right. So which is it? Here's the thing, I'm not just going to answer that question for you today, because if I do that, you're back here in 3 months when the next money rumor drops, whether it's about the dollar, Bitcoin, a bank collapse, whatever it is. What I actually want to give you is the filter, the exact process I use to take a claim like this apart in under 5 minutes and know whether it's real, half real, or nonsense. And along the way, I'm going to tell you which specific fact about this gold reset story is being repeated by almost every channel covering it right now, and it's wrong, not exaggerated, wrong. I'll show you exactly where it came from and how it got twisted. Stick around for that one, because once you see it, you'll notice the same trick everywhere. Quick context on why you should care what I think here. I spent years on a trading desk before I left to build the academy I now run, where we've walked thousands of students through exactly this kind of decision, how to read a monetary headline without either panicking or dismissing it. I'm not a gold seller, I'm not paid by a mint, and I don't have inventory to move. My only job here is to get this right. I want to be upfront. This is going to be a dense one. We're covering a real policy proposal, a real geopolitical shift in how central banks are behaving, and a real framework you can reuse. If you wanted 5 minutes of hot takes, this isn't that video. And honestly, be a little suspicious of anyone giving you 5 minutes of hot takes on something this size. So let's actually build the strongest version of this claim, because most of the coverage either oversells it or laughs it off, and neither of those helps you. Here's what's real. Judy Shelton, an economist who advised the Trump transition and has been pushing sound money ideas for years, has floated a specific proposal, a 50-year treasury bond that's convertible into a fixed amount of gold at maturity. Her preferred launch date, publicly stated, is July 4th, 2026, the 250th anniversary of the Declaration of Independence. That's not a rumor site making that up. That's her own words in interviews. Layer onto that something that is genuinely happening and is not speculative at all. Central banks around the world have been buying gold at a historic pace for the past few years, well beyond their normal reserve management. Add a weaker dollar narrative, ongoing talk about de-dollarization from countries like Russia and China, and a treasury sitting on 261 million ounces of gold, carried on the books at an ancient, almost meaningless valuation of $42 an ounce. And you can see why smart people are asking whether some kind of revaluation is on the table. If you only heard this part, you'd probably think a reset is basically confirmed. That's the honest, strongest version of the bull case, and I want you to actually sit with it for a second before we do anything to it. Okay, now here's where most videos on this topic just pick a side and yell at you. We're not doing that. We're going to run this whole claim through a simple 3-question filter, the same one I use on every single money rumor that crosses my desk. Once you see this filter, you will never fully fall for one of these headlines again. And more importantly, you also won't dismiss the real ones by accident. Years ago, I sat next to a retired airline pilot on a flight, and I asked him something that had always bugged me. With all his experience, why does he still run through a paper checklist before every single takeoff? He'd flown thousands of hours. He could probably do it in his sleep. And his answer stuck with me. He said the checklist isn't for when things are normal, it's for when you're stressed, rushed, or something feels urgent. Because that's exactly when experienced people start skipping steps and trusting their gut instead of the process. Financial rumors work the same way. The more urgent and dramatic a claim feels, the more your brain wants to skip the checklist and just react. So here's the 3-item checklist I run every single time. Question 1, is there a named, verifiable source for the core claim, or is it sources say, insiders confirm, many believe? Question 2, does the claim require a huge number of separate things to all go exactly right, or is it one simple thing that either happened or didn't? And question 3, who benefits financially if I believe this and act on it right now? not who benefits in general, who specifically profits from you clicking, buying, or panicking in this exact moment. 3 questions: source, complexity, incentive. That's it. Let's run our gold reset claim through it. Question 1. The source. Is there a named person? Yes, actually, more than most rumors get. Judy Shelton is real. She's on the record. The July 4th date is her actual stated preference, not something invented by a YouTube thumbnail. That's a point in favor of this being more than pure noise. Question 2. The complexity. Does this require one thing to happen or a chain of unlikely things? This is where it falls apart. For gold to actually go to $10,000 because of this specific bond, you'd need Congress or the Treasury to formally adopt the proposal. You'd need it structured in a way that actually forces a market revaluation rather than just being a niche 50-year bond a small number of investors buy. You'd need that revaluation math to translate into spot price rather than just book value, and you'd need all of that to land on one specific date that happens to be a national holiday when markets are closed anyway. That's 4 or 5 separate, uncertain steps stacked on top of each other. And remember, the strongest version of a bad claim is usually the first true thing plus 4 things that just sound like they follow from it. Question 3. The incentive. Who profits if you believe gold reset $10,000, buy now? Precious metals dealers, certain YouTube channels running lead gen funnels, and anyone who already holds a big physical position and wants fresh buyers pushing the price up under them. That doesn't make the underlying idea fake. It means you should be far more skeptical of the specific number and the specific date than of the general direction. So going back to our cold open, which is it? Neither headline was fully honest. The reset isn't confirmed and probably isn't happening exactly as described. But gold isn't crashing as a long-term story either. The truth, as usual, is the boring middle. Now, spotting the lie is honestly the easy half of this. I could teach you that 3-question filter in 5 minutes and you'd walk away sharper than 90% of people watching financial YouTube. The hard half, the part almost nobody actually solves, is what you do with your own money once you know the rumor is overstated, but the underlying trend is real. Because here's the uncomfortable truth I see constantly with people I talk to. They think they're diversified because they own some stock index funds and maybe a little Bitcoin, and they've never actually stress tested what happens to that mix if the dollar has a genuinely bad decade. Knowing the rumor is fake doesn't protect you from the real risk sitting underneath it. Now here's the part almost every rumor chasing channel skips entirely, because it's less dramatic than $10,000 gold, but it's honestly the more important story. It's not about a bond proposal at all. It's about what central banks have fixed doing with their own balance sheets for the last few years, with real, published, boring data. No anonymous sources required. Back in 2022, when Russia invaded Ukraine, the US and its allies froze a huge chunk of Russia's foreign currency reserves, hundreds of billions of dollars, just locked out of reach overnight. For every other country watching that happen, the lesson was impossible to miss. If you hold your reserves as dollars sitting in a Western bank, a political decision can freeze them instantly. Gold sitting in your own vault can't be frozen by someone else's sanctions list. That single event quietly changed how a lot of central banks think about reserves, and it didn't need a conspiracy or a secret announcement to do it. It's just rational behavior from countries that got a very clear warning. So let's talk about why gold actually pulled back hard after its run-up, and why that doesn't contradict anything we just covered. There are 3 forces worth separating out. Force 1 is the retail wave. When gold started making headlines, a lot of newer investors piled in near the top, some of them specifically because of reset rumors just like this one. And when the momentum stalled, that late money panicked and sold, which is exactly the kind of drop that looks scary on a chart, but is really just enthusiasm unwinding. Force 2 is smart money taking profit. Larger funds that bought gold years ago when it was unloved are simply trimming positions after a huge run, which is normal portfolio behavior, not a vote against the asset. Force 3, and this is the one that matters most for the long game, is that the buyers who actually move the multi-decade trend, central banks, have not stopped. They didn't sell into the pullback. They kept accumulating through it. So the correction you saw was mostly a retail and short-term trader event sitting on top of a much slower, much larger structural buyer that isn't going anywhere. Zoom out far enough and And none of this is really about Trump or July 4th or any single headline. It's about a world with record government debt, a dollar share of global reserves that's been slowly declining for 2 decades, and a handful of large economies that no longer want all their eggs sitting in one currency they don't control. That trend was in motion long before this rumor started, and it'll still be in motion long after everyone's forgotten about it. So what do you actually do with all of this? I think about a portfolio like a house with 3 parts. Bucket 1 is the foundation, your core, boring, diversified holdings, mostly stocks and bonds, the stuff that builds real wealth over decades and that you basically leave alone. Bucket 2 is growth, your higher conviction bets, individual stocks, maybe some crypto, the stuff you're comfortable being wrong about because the upside justifies the risk. Bucket 3 is protection, and this is where something like gold usually lives for most people, not as a bet that it's going to $10,000, but as a smoke detector. You don't buy a smoke detector because you're confident your house is about to burn down. You buy it because if the fire does happen, you really want to already own one. Gold in bucket 3 is doing the same job. It's not there to make you rich. It's there so that if the dollar has a genuinely rough stretch, some part of your portfolio was already positioned for that outcome instead of getting caught flat-footed. Here's the honest limit of what I can tell you in a YouTube video, though. How big bucket 3 should actually be for you depends entirely on your age, your other assets, your risk tolerance, things I can't know from here. That's exactly the gap that live session next week is built to close, walking through real portfolio examples so you can actually size it instead of guessing. Comment filter if you haven't already, and I'll get you the details. Last thing, because I know it's the question sitting in the back of everyone's mind right now, okay, but when do I actually buy? Here's my honest answer. I don't think anyone, including people far more credentialed than me, can reliably time a specific entry point on something like this, and I'd be lying if I told you I could. What tends to work far better than trying to catch the exact bottom is dollar cost averaging, picking a fixed amount and a fixed schedule, say monthly, and buying that same amount regardless of whether the price ticked up or down that week. It feels boring. It is boring, but it means you're never the person who went all in the week before a pullback, and you're never the person who sat on the sidelines waiting for a perfect entry that never quite arrives. Boring, consistent, and not headline dependent, that's the whole strategy, and it works precisely because it doesn't require you to correctly predict a July 4th announcement or anything else. I'll leave you with this. I make these videos sitting in the same small room I started in years ago, and the fact that this many of you show up week after week to actually think through this stuff with me instead of just chasing the scariest headline, I genuinely don't take that for granted. My goal isn't to get you to buy gold or to join anything or to agree with me. It's just to get a few more people making decisions from a clear head instead of a panicked one, because that's the difference that actually compounds over a lifetime. If this helped, the easiest thing you can do is just send it to one person who's been asking you about this reset story. That's genuinely the whole ask. Before you go, a few months ago, I pointed at 3 specific stocks on this channel, live, before anything had happened with any of them. 2 of them are up over 40% since. I want to show you exactly what I saw before the move, not after, because after is easy. That's the next video, and it's a genuinely different kind of setup than what we covered today.